Hooty hoo, all my stock market gamblers. Welcome today. We made it to the end of the week. It's Friday. First trading day of October. September's finished. September actually had a down month for the stock market. The first down month in the last 9. Okay, so what's going on now? Where's the stock market at? Well, it's come down. It's come back in, down about 10%. Now, are we at the bottom? Well, let's talk about this. You see, what happens is you got this 50-day moving average, right? Now, we've broken down below the 50-day moving average. Now, the last 8 times we come down, we hit the 50-day, and we rally back higher to new highs, But now we've broken down below it. So what was support at one point, it's now resistance. So we're down below the 50-day moving average, but I do think we'll get a bounce up to the 50-day moving average only to go lower. Look at the 200-day moving average. We haven't been there since back in 2020. I think we could come down and actually touch the 200-day moving average, which is another 5% down from here. We're down about 10% now. Another 5% would be 15%, and then it's off to the races again when the Federal Reserve comes in and we get the spending bill, the 3.5 trillion stimulus, 1.5 trillion. They pump another 5 trillion into this market. You're not going to get the collapse. But we're down below the 50-day, and I don't think we're going to get back above it. Okay, now I do think we're going to have run-ups to it. This is a trader's market. You can jump in, jump out, jump in, jump out. It's a volatile, very volatile down here. A lot of volatility, big swings, right? Okay, we're down about 10%. I think we're going to bounce up to the 50-day and then come back down and hit the 200-day. Now, it's not going to be exact. Maybe we get a swing up and then we get the swing down. But that's the plan that I got for the market going forward. Do I see a crash right now? I do not see the crash right now. Do I see a crash in 2022? Absolutely, absolutely. Okay, so let's talk about what's going on. So we've got the debt ceiling. The debt ceiling, what we did, we kicked the can down the road, right? They voted and they said, well, we're going to hold off and fund the government all the way till the beginning of December. You see, the debt ceiling came to an end in September, and, now we kicked the can a little farther, and they're going to keep kicking the can down the road. The debt ceiling's a headline number, right? Okay, it's a headline number. But what I want to talk about now is the infrastructure bills. Okay, so we're going to have a little bit of gridlock in Congress, and there's going to be a little bit of turmoil, and this could cause, it could cause the markets to go down a little bit. Look it, the markets need new heroin. It's like a drug addict needs the new heroin. It wants that 5 trillion, another 5 trillion. Can you imagine how we'll hit those record highs if we get this passed through? We have to, but everything else will go up in price. When you go to the grocery store, food will go up in price. It's just how it works. But right now we're going to hit some gridlock, and that's going to put downward pressure on the market. All right, so Jerome Powell, this is just funny. He can't make this stuff up. Jerome Powell, he was talking this week, and they were asking him all these questions. Now, Jerome Powell is, let's call it, worth $100 million. Okay, net worth $100 million. But yet he was front running the trades. He was doing insider trading. And let's say he made another, $4 or $5 million in profit. They're asking him about this. Jerome, are you doing insider trading? He goes, that's very unfortunate. Well, if they came for me and you for insider trading and we told them it was unfortunate, they would put us in jail. But Jerome, he's untouchable. It's just funny stuff. Nothing's going to happen there. Just forget about that. But the one that really cracks me up. Okay, here's Jerome Powell talking. So he's talking. They're asking him about inflation, right? They're asking him, Jerome, you said it was transitory. It's still here. It's going to be here in 2022, isn't it? Yeah, I'm afraid it is, he says. Okay, so he's afraid that, that we're going to have inflation in 2022. Well, Jerome, what do you feel about this? Well, it's very frustrating. He's such a silly guy, right? Okay, I mean, Jerome, if it's frustrating, why don't you do the right thing and stop printing money and raise interest rates, and then inflation might go away, right? Right? But no, he's going to keep printing money. He's going to keep interest rates pegged at zero. He's a funny little man. I mean, I know he's educated, but he sure sounds stupid when he talks. I don't know. He's got the power to cure inflation, but he doesn't want to do it. He's not going to do anything about it. So, okay, so we got all this money going to be printed, and it's causing these price distortions in the market. So we got these price distortions, right? What's it causing? We got these things, they're called zombie companies. What a zombie company is basically a company that cannot pay the interest on its debt. Doesn't have enough money coming in to make its debt payment, right? It's got all this debt, but it can't even pay the interest, so it needs to borrow more money from the Fed, and the Fed's happy to lend them more money. Why? Because the Fed's, they're crazy people, right? But so they loan the zombie company all this money. Okay, so now they can't pay their bills, right? Now they have what's called junk bonds. Their bonds are junk bonds. Okay, junk bonds are bonds of zombie companies. These zombie companies have to borrow to pay their bills. It's a Ponzi scheme. They have to borrow more money to pay the debt that they already have. They have to borrow more debt to pay their debt. A big Ponzi scheme going on with these zombie companies. They should be out of business, and the resources should go to work for something else. Invest in something else. They have a bad business model. They can't make money to pay their debt, but they keep going on. They keep going on, and they have what's called junk bonds. Now, junk bonds, now watch this, the HYG, it's a junk bond indicator, right? And if the junk bonds start to go down, that means the rates on junk bonds will be going up. When that happens, that's where you're in jeopardy of getting the market crash, and that's not happening yet. Look, here's what's funny. Okay, interest rates on junk bonds are about 3%. 3%, maybe 4% if it's really bad junk, but 3 to 4%. Okay, do you know the interest rate on like a 30-year treasury is paying 2%, but people will pay for these junk bonds to get an extra percent? Now, who's the people that are paying for these junk bonds? Well, it's the pension funds. The pension funds need to get more interest coming in so that they aren't underfunded. They need to get 7%. They're having a lot of trouble finding yield in the marketplace. So they're out there. They're the ones that are holding all these junk bonds. And now it's amazing to me that junk bonds, when they trade at 3 to 4%, do you realize that is a negative real interest rate? A negative real interest rate, because we got inflation running. Government's going to admit at least 5 or 6%, but the junk bonds are only paying 3 or 4%. So that brings a negative interest rate in junk bonds. Never seen that before in all my trading days. Just doesn't happen, right? So you got these zombie companies. Now, normally in the S&P 500, there's about 2% of the companies are what's known as zombie companies. Right now, there's 20% zombie companies. I mean, if you think about it, the U.S., the United States, is a zombie country. It cannot pay its debt, cannot make the payments on its debt unless it borrows more money to pay the debt. The U.S. is a zombie company. Once again, we kick the can down the road with the debt ceiling. We're out till December 3rd now, right? So you got all these price distortions in the marketplace, and it's just causing chaos out there. It really is. I mean, it's things that shouldn't be happening. I mean, the real estate market, record high. The stock market, well, we're coming off that record now. We're probably won't hit a new record till the end of the year, maybe even into next year. But this is price distortions. They're just pumping the money in, and it's causing all these price distortions, right? I mean, there are companies out there that they should be bankrupt. They should be done. I mean, but as long as we can find people, well, the Federal Reserve is the one that loans the companies the money, but who loans the United States the money? Well, the bondholders. Who are they? It used to be China. China's not buying our bonds anymore. They're not that crazy anymore. So once again, the Federal Reserve to the rescue, print the money. We're getting that inflation problem, which is frustrating to Jerome. And when you go to the store, look, They say the dollar's getting stronger, right? The dollar is not, it's not getting stronger. It's getting stronger against things like, maybe against European currencies, maybe against the Mexican peso. Yeah, it's getting stronger against those things, but against buying food, against buying gasoline, dollar's getting a lot weaker. It's taking a lot more dollars to buy these goods and services. And that's going to continue. It's going to get worse. I'm telling you, this is not a good thing. These price distortions, they're not going to go away. It's just going to continue on as long as they keep printing money. I keep saying we have the solution. Just go back to sound money, go back to a system, a gold standard, if you will. Now, nobody wants to go on a gold standard, Mike. We can't print the trillions of dollars. We may need to print trillions of dollars when we go to war, and we probably will go to a war soon because we can do it, because we can print the trillions of dollars. You go back to a gold standard, government can't spend the money. Now, I'm for a smaller government. I'm for taking away the power from the government and giving it back to the people. But as long as you have this current system we're in, the government can print unlimited money and make you a slave and me a slave in the system. Look, they have all the power when they can print unlimited money. You take that away from them, how much power do they have? They have zero power. So they don't want to do that. They don't want to go back to sound money. They don't want to go back to a gold standard. They want to be able to print this money and make you a slave and me a slave. Because we're the ones that have to pay it back, not them. They don't have to pay it back. They get to go out and spend it. We are responsible and get to pay it back. Well, I went on a little rant today. I hope you enjoyed it. We got the weekend ahead. I'm Tall Mike. Give me a thumbs up if you like this stuff. Smack that subscribe button so we can talk again next week and see what the stock market's doing. I really think we're going to get a bounce from here. Head back up to the 50-day, which we're going to, it's now resistance, going to come down, and we might even get as low as the 200-day, which would be down another 5% from here. Crash? Not yet. Probably not till 2022. I'm Tall Mike. Get out there. Have a great weekend. We'll talk again next week. Bye-bye now.